The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Thanks, Steve, for 2 great hours. I come in here 11 o'clock till 12, Monday through Friday, Eastern Time. 877-927-6648 is the number to call. Today I'm followed by Larry Pesavento. Then we get Daryl Martin. We get Dave White. We get Ken Shreve. We get Tom O'Brien. Wraps it up 4 o'clock till 6. And most importantly, this being the 25th of February, almost the end of the month, with this whole sequestration. You know, looking at last night's Oscars, I kept thinking, they keep talking about sequestration. It's sequestration. Anyway, back to the story of the market. The Dow is down 9. S&P is unch. And what I'm finding quite interesting here is that the composite is up 5 at 31.67 because Apple was showing a little strength. Now it's not. It's unch. And you've got gold up 13. You remember we spoke about this on Friday? I said there's a good chance that the dollar just might be getting to leg E in the daily. Could be pulling back for a little bit because it's had a very strong move. Could have a little digestive period here. And we could get a nice counter trend balance in the gold area, gold and silver. And as such, I had, for my subscribers, we were taking a position in the gold stock. I don't think I've had a gold stock on the list just for a long time. Remember, I had peak F in the monthly chart of the GLD and the gold contract, the continuous contract, and I said, and silver SLV. So I said, just got to stay away. I still believe you've got to stay away. But as a counter trend rally for a percentage gain, just to trade, I see a low risk trade here. And if it moves up a little bit more, we'll just put our stop to make the tightest stop possible. So with that said, let me do 2 things right now. Another thing, talking about the Oscars last night. First of all, I thought that guy, whatever his name is, I didn't think it was very good. A couple of, I didn't think it was very good. In fact, it was, talking about excessivity, when you can take, remember, I always talk about the engine size and the bumper size from back in the 1957 with the fishtail going right into the 60s. Invariably, the excessivity created a top in the market. And if you looked at the clothes last night, the clothes that the women were wearing, one of those dresses, the material could make probably at least 3 to 5, certainly of some of those actresses' dresses. Excessivity. What about the length? I wrapped it up earlier. I said, I've got work to do. I was doing my charts, and I can, there's just so much I'm going to be able to take in, and I didn't want to. Usually I do stay up late. I like to read, though, after, working late. And I said, what are they doing? I mean, what a waste of time and stuff there. So anyway, I got that off my chest. Okay, so now what I've got is, the reason why I brought it up again is I was thinking there were these 2 guys that I think they were the organizers of the whole event. Can you imagine? Now, I believe that there's someone right from the Newton area whose she and her daughter went out to LA, and I think they are part of the people that do the gifts, those little gift box, when your kids go to a little party and then they get the little gifts, everybody gets a little gift at the. I can't make out, because they were talking about $5,000 trips and all sorts of things as gifts. Just the gifts alone were unbelievable. A little gift box, with wow. So that is truly excessivity. Now, okay, what I was really going to get to is getting so organized, everything so precise, and then they're doobie, the cutoff music, Jaws, and of course some people listen, some people don't listen. Everything has to be timed so precisely. You never know what these people are going to say. And it's so fascinating. These are people that are these actors and actresses are so articulate in their movies. And then they get up on stage and they go, and I'd like to thank, amazing. They are, it's just the funniest thing. So, this morning, just as I'm about to get on here, all of a sudden my Comdex, the special setup that we have here at TFNN, where I have this really fancy, what an age we're in. I have right here on one of my desks, what is it, about a 6-inch by 8-inch, probably not even 8-inch, maybe 7-inch by 5-inch. It's basically an output, it's got CD tape, input, output, phones, main mix. So I've got a mixer right there, and then I have one other very small little attachment to it, and that essentially gives you, and a very nice microphone. In fact, I changed it for a headset with a long wire so that I can move around and I can turn around instead of a microphone. So it's a headset just like they have, at events. And all of a sudden I couldn't get on. So here we are with this incredible technology, but I couldn't remember my name and the password for this particular thing. Well, it turns out to be very simple, thank goodness. Once again, with the technology we have, I zip along and Mike Comey just quickly gives me the names. I type it in, and I'm right back running again. And what's really interesting about it is that this is a society, and I believe that that's part of what we're looking at when we are looking at the jobs. That there has been a growth in jobs. It's not in the usual sectors, and it's not being, I can't say diagnosed. It isn't analyzed and assessed and put in the right categories. That's what I'm thinking, number one. Number two is, it does occur once in a while that there are major market rallies and there are jobless recoveries, but it's usually, I don't think it's more than 18 months to 2 years maximum. We're going on for 3, almost 4 years. So there is a difference here. So in just a very brief second, let me say, technology is amazing. Technology, as I just demonstrated here, just in my office right here, I have a setup that I know, being a recording musician years ago, I just know. I used to copy music, in fact, for the South African Broadcast Corporation when I was back in South Africa, and I was studying music to earn a living. I used to copy music, and I used to go to all the sessions that I'd copy music for the different people, the different programs, and I know what it used to cost. And I can imagine, like a Boston Symphony Orchestra to do a major recording you're talking about a huge amount of money for every hour. And look what we've got here. Look at the technology, what it's done. Very inexpensive, very small setup here. Probably today you could get it even cheaper and more with more complexity to it. I don't need that. Microphones, everything. That is in itself a major change in the dynamic, as happens every 100 years at the turn of the century. You get a dynamic change. Automobiles, electricity, back in the 1900s. This is the change, and it's a change that is being reflected in the market in a very different way. So, got that out the way, got the Oscars out the way, and what else was it that I got out the way? Oh, and here it is. In a split second, I am back online. I was thinking of the guys last night. Can you imagine all the little things that went wrong in a production like that? They don't even tell you the cost. I can just imagine the amount of money. In the worst recession since the Great Depression, Hollywood never falters. So this is fascinating. Now let's go to the Dow for a moment. I have a chart here. If you're looking at Tiger TV, I'll get to the market. I just needed to get that off. Sometimes you got to let out a little steam. I got that out the way. If you're looking at the market right now, it's interesting. I felt when Friday there was this announcement after the bell. I don't remember how I saw it and where I saw it. There was just a flash. I think just a flash across the screen that said the British. It was something about default. I don't know what it was. I can't remember now what it was, but it was a very negative connotation. bonds or the ratings. I couldn't remember what it was. I sort of said to myself, oh my goodness, because I only saw it for a split second, then I never saw it mentioned again. And then I thought, okay, well, let's see what happens on Sunday night, because it's really important. If the market opens, down, if the futures open down 8 to 10 S&P points, that's going to say, you know what, we actually do have a top, that the move on Friday was really an aberration. And then I went through chart after chart after chart. And what I found was that in looking at these particular charts, the weekly, not the dailies, so many of them said, hey, we're a little bit tired, we need to have a rest. But when I looked at my portfolio for the subscribers, I call it a portfolio, but it's really just the list of stocks that we have. I said to myself, gee, one of them is one that I'm dying for it to pull back, to add to. I love what I'm looking at. Another one is in an area that normally, good times, bad times, it's in alcoholic beverages. They don't usually say. I remember old Marty's down the street on Washington Avenue. I was there during the really bad time of the market downturn in 2008, 2009, and I heard him talking to someone, and he said 2008. I heard him talking to someone, and they said, "Oh, things must be bad." He says, "What are you talking about? Things are even just as good. People, instead of buying $100 wines, they're buying the $25 and $30. That's all they do. They don't stop drinking." So we're in an area that says it's an independent source at this particular point. It should not really be market related. Another stock had earnings today and spiraled up to add to the terrific gains that we've had. And I'm saying to myself, wow, this is a stock that really covers a huge part of the globe. It's really important that this stock is moving higher. And then I look at another one that we got, and I said, okay, we've had a turnaround in the gold area. This is a brand new stock. I don't know how well it's going to do, but I think we got a nice entry point. And if the dollar does pull back, doesn't have to pull back much, but if gold has a reflex rally after such a big move down, at least a counter-trend rally. So this is absolutely a market of stocks, not just a stock market. The two short positions we got stopped out of one. I had actually, I'm sorry for the subscribers, it was on the list. It was number 14 on Friday. Usually I have bullet points about between 15 and 17. Today it's 16. In updating the stock whose earnings came out this morning, and I wanted to elaborate a little bit, I think I bumped it off the list by mistake. It was just it was there, and then I took it off. So it did get stopped out for a 20-cent loss. It's actually one that in a way I felt a little bit comfortable owning. Big deal. We're out of it. We can always get back. It's not an issue. And the other one that we've got more as a security and insurance is holding quite nicely at this particular point. But I'm going to go through the market in great detail in a moment. And what I'm going to be talking about...
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
There it is. Jaws. All right, folks, we are back. Dow's up 13, S&P's up 1.93. Let me finish the story there. Gold's up 17. S&P's, the silver's up 61 cents. And you've got platinum up 7. And finally, you've got high-grade copper up $1.25 at 1.25, pennies, and up at 3.5. And you've got crude oil at 93.19. Wait a minute, I saw crude oil earlier on. That was rallying. So, and then bonds are up 7.30 seconds. Let me just show you a couple of things here. I have a webinar coming up. It's a level 2 in the ChapmanWave methodology. Level 2 is where it's only for people who have done level 1 or have traded using the ChapmanWave methodology and are very comfortable with what they know and would like to look at the chart patterns. In this particular instance, yes, we do talk about peaks, A, B, C, D, E, F, etc. Talk about the instant restart. This is where I go into the slightly more complex things. Only complex because you got to know one thing before you can go to the next thing. That's basically it. The concept is the same, and that's the flat base restart. It's just a bunch of things. It's putting together formations and patterns that I've developed over the last, the latest things, I'm always looking for new things the last 3 to 6 months. Why? I look at the chart patterns the way I do, how I use the time frames, why we've been able to go from a one particular stuff. You know, I'm going to have to do this. I didn't really want to do it because I'm a little bit, I'm not necessarily suspicious. I call it hubris, that when you talk about something and it's kind of showing off, those trading gods, lowercase t, lowercase g, those trading gods are out there. They are ready to just bonk you on the head and say, no, don't do that, naughty, naughty, naughty. But sometimes the only way that people are ever going to know what I'm actually doing and why I'm doing it is if I show it. So I'm going to show a particular chart just now in a few moments. Let me just show you one thing here. In the ChapmanWave methodology, the object is to go from an identifiable low bar to at least 4 higher peaks. Look at the E-minis. On the 14th of February, last week, at 1510, it turned around and started peak A. Peak A is in the E-minis at 1520.75. Pulls back, goes to a higher high, 1521.75 on the 15th. Pulls back, goes sideways for a while. Then it goes quickly to peak peak C at 1529.00, and then D and a quick E at 1530, and that occurred at on the 20th. That was on Thursday. Yeah, on Thursday at 4 in the morning, 1530, and then it plummets down to 1495. Comes in trough C. That's now trough C is something else to discuss. Why? In fact, this is what I'm going to do in this particular workshop. I'm going to discuss the sharp volatility on a what Tom and Larry and Steve would call an A to B equals C to D down, or in fact a tiger extending to a butterfly. I'm going to discuss that lightning bolt down move, how powerful it can be as a buy signal. I'm going to be discussing things that I don't normally get a chance to discuss, even in my Master Trader series, because these are developments and assessments that I've been making over the last year. But look what happened from the trough at 1495. Where do you go to? The other one went to an E, even though it was just a tad higher than the D. This one went to peak D this morning at 1524. At midnight, no, 12 o'clock. Does that say 12? It says 12. No, I saw it this morning rallying. Anyway, it went to 1524.50, and look, this is the sharpest down move we've had. Sharpest in price, and it might turn out to be time. We'll see. But look at the MACD. It's still strong, and Stochastic's holding at 88. And that's one of the reasons why the market hasn't yet given in. So this is the E-minis. Now, I suppose I'm going to have to do this. I'll do it because it's really important. If you go to the front page of TFNN, in fact, let me do that right now. TFN right there, front page. The Master Trader Series with Basil Chapman. Come join Basil for this all-day class taking place at Babson College. It's actually Babson Executive Conference Center. That's where it is. It is at Babson College, but it's Babson College, the executive, fabulous building, fabulous setup, fantastic meals, and we have a great lunch and breakfast. And in fact, it's going to be on Saturday, March the 9th. That's 2 Saturdays' time, and as I say, it's the level 2 for anyone who's done level 1 before. I'll be back straight off these messages. Dow is up 13.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back, and we've got our first caller. We've got Ben in Tallahassee. Hi, Ben. How are you? Ben, you there? Oh, sometimes there's a computer delay. Oops, Ben dropped again. Ben, I'd like you to call me back, and as soon as you call back, just say, I'm here. I don't mind you saying, I'm here right in the middle of whatever I'm saying, because it's really important. You are calling on exactly what I had a couple of emails about, really important in the ChapmanWave. Now, once in a while, there is something that happens that I don't want to call it an aberration, because it always resolves itself and turns out a little later to be really clear. But this is what I'm looking at here. If I am looking at the Dow, and Ben wanted to talk about the DIA, and right now that we're going to be doing the same, pretty much the same thing. If I look at the pattern from the low of 12,883, the question I had was, hey, could this be new leg A at 14,088 that was made today? And if so, implying that it should still go to a B, a C, and a D, what the heck is going on? I just added the what the heck is going on. But that's really what you should say. You should say, wait a minute, these things are usually so clear. Look, the last one from the Dow on the 16th of November at 12,471 went to peak A, B, C, D, a beautiful consolidation of one day, You remember the stalk leg formation is not just a formation, it is a mindset in the buying power out there, and it says every decline has to be bought, and normally you don't get more than 1 to 3 sessions of a pullback. Well, look what happened. You didn't get more than 3 sessions of a pullback, except for when it got to a peaky at 13,329, little doji high on the 12. That was on December the 12th. 3 days, and the 4th day goes to peak F. That's where the stochastic gives you a divergence. The unbalanced volume gives you a divergence. And the MACD starts to turn around. And you get this huge volume to the downside. But I use volume in a very different way. So to me, that wasn't the concern. The concern was how the 200-period exponential moving average, I've just dotted it so you can see it clearly. Let me make it a little bit bigger. I'm looking at my mobile phone, and I can see that it will be better to make it bigger. There it is. So that line there is the 200-period moving average. It goes to 12,883, and that was in December the 31st. Spirals higher. I'm not sure whether that's that single leg A up or the G or whatever it is. I call it a G/A. It pulls back for 1, 2, 3 days. The 3rd day, it holds the 9-period moving average. The 4th day, it breaks out, starts to move. It goes B. Then it goes to C at 13,969, the 29th of January. It goes to D at 14,019 on the 1st of February. It pulls back, so the low of 13,860 gets undercut at 13,852, and then it goes to an E and an F. So if I call that, I'm making this a little complicated, this is usually what I do on a Friday, but it's so important right now to be doing it. If I made that A to B, it still goes to C on the 19th of February. But wait a minute, the low of that pullback is 13,834. That undercuts all the previous lows. So it means that if you pull back and then you make a higher high, I have no choice but to call this A. Can the A fail? It's really rare at this particular point to call this an A and have it become an A minus at a new recovery high. It's just not that it can't do it, because I'm looking at so many stocks that are in fact somewhat overbought, and key stocks and indexes. So this is what I have to do. I have to say to myself, okay, the MACD is acting very poorly. The stochastic is very weak at 48%. On-balance volume is turned down. If for those of you who are using the relative strength, and I remember I've had relative strength in the background there for as long as I've had these charts. I mean, I always have it in the background. Why? Because someone that I know very well is an outstanding technician, and one of the best I've ever come across, especially for Elliott Wave. It's not his job, it's not his business at all. He does something completely different. He said to me, I use the relative strength, and showed me charts going back to the 1950s and 60s. And he had a beautiful way of using it, so I use it. And his philosophy was above 50%, it's good, below 50%, you've got to be careful. So if you're using that, the relative strength gave a signal, where is it gone? Right there, and that there was on the, I'll show you the bar right now, right there. At peak C at 14,019. Well, we went higher. We used up time and we used up price to the upside. So the relative strength indicator was very early. The on-balance volume indicator was fantastic up until today, because it gave the signal right back on the 19th that you got to be careful. So is this an aberration? Is this that single leg A that I often talk about that can fail? All I can say is very unusual. What I did over the weekend is I said, you know what? There is even a chance, and it's just a chance, that this could become an even longer sideways move. Now we're talking about something different. We've got sequestration coming up, or was it sequestration coming up on Friday? What if there's this hesitation and we digest for a little longer, but we don't really break down. Look at the S&P, SPX.X. The S&P is it's actually holding a little better than the Dow. It did the full, you remember the ChapmanWave unconventional flat base restart. This is what we'll be talking about in the webinar coming out. It's a seminar, all day seminar, 8:30 to 5 o'clock on Saturday, March the 9th at Babson Executive Conference Center in Wellesley, Mass. And if you've done any of my level 1 work, or if you've been to a number of my workshops, this could be just perfect for you. And there's another reason why I love to time these things when I'm looking at the market, possibly making some kind of a pattern that is a very important pattern chart-wise and time-wise for the coming weeks ahead. Because it tells you, this is what you've got to look for. We go through the chart pattern over and over and over so you really understand it. And as the map unfolds, you're able to deal with it without any panic, just a very orderly way. Now, here's what I'm looking at. I need to go to the NYA for a moment, NYA.X. This is the very broad New York Stock Exchange. That made the peak G. That did the leg body of the stalk leg formation, went to G, pulled back sharply, had a nice rally on Friday, and today went to a slightly higher highs, pulling back. The technicals are not that good, but I have to keep referring to you in every time frame. Look at the weekly, and this is the thing that's the most important that I find people who come to my level 1, either the 2-day seminar of level 1 or the level 2 review, and looking at all the new things that I've been working on. When we learn that you can go from one time frame to the next time frame, for instance, we've got a stock that we've had since November. And what happened was the daily improved, then all of a sudden the weekly improved. Well, that was really important. Well, over the last 2 weeks, I now can include the monthly. And that's really important. Why? Because all the time I'm building up this upside energy, which says, yes, it could break down at any point. Obviously, any stock could. But you know that you're moving through the time frames to get a much bigger picture, a picture that says, don't worry, this is a stock that has acted so well. It's one you might even want to add to in your portfolio, in your positions. So this weekly chart says to me, hey, if this is either a leg C in the New York Stock Exchange in the weekly chart, and the support is at 8,804 to the candle of last week, the low of 8,778. I don't see any reason why this couldn't even have a digestive phase and pull back to 87 or even 86.50. Because the MACD is just, it's beautiful. The fast-moving average, the green line, is flattening out, but still very good. And the slow stochastic is at 94%. And the monthly chart is at 92%. And look at the formation. It is a lagging index, an important one, but lagging in leg C, and having gone to 8,944.28 to 9,003.78. In leg C, it says, yeah, this time you can still have a peak C, and then you can still make a peak D. But most importantly, when you put it together, look, we've seen the Dow, we've seen the S&P, and now we're looking at the New York Stock Exchange. I'm going to add the Qs. That is the PowerShares QQQ Trust ETF. Look how the rising wedge is coming in here in I have no choice. I've tried to count it umpteen different ways. This has to be peak B. Peak C starts above 70.58. That's the way I have to look at it until it decisively breaks down below 61.31. If it closes below 61 at any point, that is going to be a negative. But now let's put it together with the monthly chart that I did not look at in the SPX. That is in leg C, with the stochastic at 88%. On-balance volume is getting a little bit toppy, shorter term. Relative strength hasn't given any signal there. It's still rising. And the 9-period exponential moving average at 1434.8 is quite a bit below. And the other thing is we're into the resistance area. But so far, and I really must emphasize, so far it hasn't broken down. Now, when I look at the TLT, so now let me put that into context. And what I'm saying is the S&P daily has a pattern that says, you know what? I could very easily come back, take a breather, go down to 495, hit twice, back on the 4th and the 5th of February. That would not be uncommon. Could even go a little bit lower. But that whole 1480, what can I say? The whole 1489 area should be 1491 to 1489 should be very strong support. That's why I'm looking at it right now. So the shorter term is weak. In the QQQ daily, it's done almost everything it needs to. It's gone to a peak F in the daily. It did the body, it did the neck, did the head. And I said beam, but it shouldn't be a beam. That should be beak, B-E-A-K. And that's the beak coming down. So this is a gray A in the Qs. Now, here's what's very important. I'm going to put the whole picture together. TLT. The TLT is running very strongly. It's at 117.68. But it is going to be a weekly close on the TLT. And certainly that can happen. It's one of the reasons why I wanted to keep some bearish position in the portfolio. It was very important. I should have kept 2, but we've got 1. That's fine. And that says you've got to protect yourself because there are so many signals that are saying there's no reason why you can't expect some kind of a pullback here, a digestive phase, even if it's just a nervous phase because of the sequestration. So bonds are rallying. The TLT's in leg A in the weekly chart. It's in leg B now in the daily chart. Monthly chart says, whoa, this is a very important level to watch because if it broke under 114, it went down to a low of 115.51. If it broke under 114, I would have to just say, uh-oh, that is really negative action on the TLT, which is the Lehman 20-year T-bond fund. If I go to the VIX index, it's still holding quite well. Look, it pulled back today. It went to the 9-period moving average. It's holding pretty well. So there's a lot going on here that says be somewhat cautious. Your long positions, if they are the long positions that have now gone into the weekly and the monthly phase, that's very important because it says they've acted very well. They've given you a very nice percentage gain. Now you can assess whether or not I didn't want to get out of them and then get back in. All I wanted to do was to say, are these the stocks that I would like to add to? And my suspicion is they are the stocks I would like to add to. So maybe on the one hand, I'm really actually wanting some kind of a pullback. Volatility index, let's make it real clear. If this week the volatility index goes above 16.21, that's going to say yes. Now the market is ready for some kind of a digestive period. I don't know yet how long it's going to be. The weekly chart suggests that it might not be more than 7 to 8 or 9 sessions if it continues from the other day. And we've already had quite a few because we haven't made a new recovery high in some of the indexes. Now here's the other thing. The VIX, the dollar, the DXY made a new recovery high. 81.65 was the high early this morning. 81.64. It's at 81.55. This is it's leg F. I said E. This is leg F. There's a left side, right side, price time. And hey, it's worth doing this in great detail. I'll be back straight after these messages. 877-927-6648.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Gotcha! Whoa. Hi, folks. We're back. Basil Chapman, Tiger Technicians out. Dow's down 52. S&P's down 5.3. That was a quick turnaround because this morning the Dow was up about 55 or 60 points. Now it's down. So that turnaround is really important. That could be that single leg A phenomenon that I talk about often, that there's an early big spike, and that spike is given up. That to me is going to be key. How we close today is going to be really important. So the volatility index, as I said, getting into the 16s says, whoa, we've got to be careful. The TLT rallying strongly at 117.74, gets to 118.60-ish. That's the second of the three bears. The fourth one, so we've got the VIX, the bonds, so VIXI, Bondi, and Dolly. Now the dollar has this pattern, and this is a pattern that I speak about very often. It's a double cup formation, and what it did is a beautiful left side, right side. I'm going to do this a lot in the workshop. How do you get that left side to the right side price time match? How do you get the diagonal that's so important? In this case, the diagonal actually starts way early and it goes all the way and it goes bam, right through. What points can you use to get that diagonal? How does the diagonal, what I call the ChapmanWave inside wedge, how does that give you the idea of which bar to use as a midpoint. In this case, it's the exact midpoint right there, 80.87 in the dollar daily chart of the 4th of January, from the left side high of 81.46 on the 16th of November, right through, bam, a day early, I'm sorry, it was a day early on the 21st of February to break the left side high of 81.46. It went to 81.51. And today's high is 81.60. I have 65. It's actually 64. But I've got this as leg F, and I'm going to have to say F because it's so strong, with the technical so strong, that it has to be considered as a potential F/B. What on earth does that mean? It means a technique that's in my CD introduced in the ChapmanWave methodology of the instant restart right there. It's in place. There's only one thing that I have to say. Very often when the fast-moving average of the MACD acts the way it's acting right now, you can go in the price point, you can go to a G and not recycle to the D or another DEF, a second buy mode. That's what you got to be careful of. So that's just something that I'm mentioning here. We don't know if it's going to happen, but the breakout is very important. And here's the other breakout. It's in leg C in the weekly chart. The monthly chart, as I say, I've been saying for a while, still looks lousy, but it is improving because the fast-moving average of the MACD has deflected up, and that is very important. Now, so, three bears. If the dollar breaks into the 82.50 area, if the VIX goes into the 16s, right now it's at 15.20. I'd have to say 16.30, somewhere around 16.30. And if the TLT goes to 118.80 or higher, I believe that we will have this digestive phase. But it coincides. You've got to have news. And the news right now says, be careful. We don't know what's going to happen on the 1st of March. In fact, it might turn out to be the best thing for the market. It might be the worst thing. We don't know. That's one of the reasons why I wanted to have protection for us by having an index that we are short. We had to. One just got stopped out. I apologize for that. But the other one is still acting very well. So I want you to cover that. And at the same time, I'm going to do something else. The EUR USD, that's the euro-dollar currency pair, tried to rally today from trough T in with a doji candle on Friday. The stochastic's at 7%. That's very weak. The stochastic has to really move to about 15, and that'll help. The USD JPY is the dollar Japanese yen. It broke out. It went to the higher high for the neck, and now it's pulling back. Oh, what a fascinating market. Stay tuned for Larry Pesavento. I'll be back on Monday. Don't forget, I've got my Level 2 ChapmanWave seminar coming up Saturday, March the 9th. Look at the front page of TFNN. It's all there.